strike the amen very soon, and it's not gonna be funny. Just like Trump, President Trump mentioned earlier this morning that the USA is locked and loaded, and they are ready to go against the Islamic of Iran. So the major problem now is all this war escalation. That does not mean it's gonna affect the market for the upcoming week. So we are looking at the Fed chairman on how to cut the interest rate. That's the most important factor we are focusing on, because at this point it's not just about the macro and all those fundamental news. The most important thing is how do you correlate all these things with price action. So it's very, very important, because the USA, they are demanding the total reopening of the Strait of Hormuz, but it's not going to be easy for them, because Iran, they don't want to put an end to this their nuclear threat. So based on this whole thing, we just have to stay focused ahead of the week to see if they're gonna make a good deal, because now the USA president is now bringing Israel into the whole shit full time, so it's not gonna be funny for the Iranian people, you know. So the best thing is for the Iranian Republic to open the Strait of Hormuz, so that they can be able to resolve all these things, because they already had an agreement passed few weeks ago. So at this level, we just have to keep eyes on the major things, which is we have to focus on the major key levels. That's the most important thing. It's not just about the whole war escalation, no. Because when I started trading 8 years ago, I used to focus on just the basic support and resistance, you know. That's why you see I only do my analysis on the higher time frame, marking the major key levels, which is our major demand and supply levels in the market. So once you can understand the price reaction towards those key levels, once you understand how the internal liquidity and the external liquidity works, it's gonna be easier for you, because it's very crazy for you to be scanning through the whole multi-time frame that you want to trade. The most important thing is do your top-down analysis for the week. Then when you want to execute, you have to go down to the lower time frame for you to be able to understand the price reaction. You can't be trading with 4-hour time frame. It's crazy. I don't know, it works for most people, but to me, no. Because the lower time frame is there to show you when the market structure shift takes place in the market, and when we have a liquidity grab, just like what happened here. We have this liquidity grab here. Why a lot of people were waiting for the major liquidity sweep before the major price expansion will take place. So the market can decide, okay, just to cover 60 or 70% of the previous HM range. What they're going to do is to come back to that previous key level, make a liquidity sweep, then come back for the second time, grab the liquidity, then the next one is going to be crazy. That's when you expect the major price expansion. So it's very, very important, guys. You just need to understand them, how to trade them, the key levels. It's very important because once you understand how the market structure works in line with the Q zone, then for you to mark your key levels, it's going to be easier for you, because what you're going to focus on now is just the price and time, which is the major price where you're going to execute, and the time for that price reaction to take place. Just like if you look at the 15 minutes time frame, you can see my analysis here on the gold 15 minutes bullish market structure plus the internal liquidity we have here. That's why we have the major key level at this level, which is 4027. Then our first target should be within this zone, then 4101. Then we'll see if the market is going to create a new swing high for the week. So that does not mean this analysis is 100% accurate. No, we focus more on execution. So if we don't see the price reaction towards that major key level, then we have to wait. Maybe after the Asian section on Monday, we'll see the price reaction during the New York session. It's very, very important. Once you understand how the market structure works in line with the key levels is so important, because the most important thing is you following the market structure. It's not you going against the market structure. That's what most people don't understand. Because when we have overall bullish market structure, when you look at the lower time frame, you can see some crazy manipulation. You would think, oh, we have a good bearish setup, because you see one kind bearish engulfing candle. You might think, oh, the market is going to push down with some momentum. No. You just need to understand that the Asian range must be taken out during the London or New York sessions to push price to the major direction, which is our major key level. So during the price delivery, you just have to follow the daily bears of the market until the next day to see the price reaction during the Asian section. That's how you will be able to, know where the major internal liquidity will be created, because you have to take note that the market always runs to the inefficiency or the areas of liquidity, like our relative equal highs and lows. If you look at the previous price reactions here, you see the market has been respecting this level. They have been respecting this key level for a very long time. You already have multiple price reactions here during the previous week. So this was July price reaction. Then we just need to focus more on the major thing to see if we're gonna see a major price reaction during August, because we're expecting gold to make a new swing high. Then if possible, maybe we'll see gold above 4k or 5k before the end of this quarter. So guys, if you're not part of my Telegram community, you can join to follow up my daily analysis and also my free signal